Now, for the start of cost accounting, we're going to speak a little bit about accounting for labor, right? And what we're going to cover, some of what we're going to cover, are throughout these videos that I'm about to post, are distinguishing between the futures of hourly rate and piece rate plans, specifying procedures for controlling labor costs, accounting for labor costs and payroll taxes, preparing accruals for payroll earnings and taxes, and eventually accounting for special problems in labor costing. So some of the issues within labor costs that we have, just as a business owner, you're going to ask yourself several questions. And one of these questions you may ask yourself is, how can companies, or my company specifically, control labor costs in a highly competitive global environment? When you think about labor costs, maybe we can put it in the context of maybe just owning a restaurant, right? So you own this restaurant, and now you're saying to yourself, the major cost that we have is possibly the rent, and secondly is maybe the labor cost that we have. How can we be even more efficient, right, with our labor costs? Do we really need this employee here to create this type of food for as many hours as they're creating it? Do we really need these individuals who are maybe baking the pastries? Can we just outsource it and maybe purchase pastries from somewhere else in order to cut down on those labor costs? So there's a lot of questions that you're going to ask yourself as a business owner, right? Or even thinking to yourself, if you have an even greater type of organization than a restaurant that maybe offers some type of incentive plans, maybe tuition reimbursement, maybe more vacation time than another organization in order to stay competitive. And based upon that, what is the cost of that? Does your place of business offer health insurance? Because health insurance is also a major cost. And with that, should you really be offering bonuses or more holiday pay or vacation pay? And how is that all accounted for? So, as an accountant, as a business owner, we need to really understand how this is all accounted for in order so that we can make the best decisions possible when we have our organizations or the organizations that we're leading through accounting. One of the thought processes is, and we see this within accounting, your first couple of courses in accounting, whether it be in accounting one and accounting two, or another type of intermediate accounting, that we have something called direct labor and indirect labor costs. So direct labor costs, or the way that I think about it, is something that's going to directly affect the product, right? Something that isn't just a general type of cost that we have, is something that's going to directly affect it. So when we have this restaurant view, and what goes into the cost of this food, what's going to directly affect the taste of this food is possibly the person creating the food, which is the chef or the cook. Something that's indirect may be rent. Something that's also indirect may be the light, the electricity, maybe the manager, right? Those are indirect costs that are going to happen regardless if we're creating this food or not, right? So something that's directly going to affect this food is the person actually creating it at that time, okay? When we talk about indirect labor, of course, other types of costs, whether it be managerial costs, whether it be electricity, which we call overhead. So all the overhead, the rent, the electricity, the cost of buying the plate, right? That's all been accounted for, right? So the cost of buying the plate, we can say that's part of our startup costs or our sunk costs. Our sunk costs are going to be anything that we purchased in the past that is mainly not going to be a direct correlation of us creating this food right now. So we have two types of costs that are going to affect our earnings at the end, our profitability at the end of the year, or at the end of the day, whatever type of period that you're referring to, are direct labor and indirect labor. So when we're accounting for this manufacturing environment. So, as it indicates here, the accounting system of a manufacturer must include the following procedures for recording payroll costs. It says recording the hours worked or quantity of output by employees in total by job, process, or department. When we think about this, I like to, especially with my spreadsheets, I love Excel spreadsheets, and as an accountant graduating with an accounting degree, you should know a lot about spreadsheets. All right. Um, so we're trying to account for all the expenses that we have, either by the job, which in our scenario of a restaurant could be the meal prepared, the process it takes to prepare it, or by the department, whether that be the dessert department, whether that be the entree department, that could be the appetizer department. If we want to think of those as departments, as three types of sets of individuals who prepare these meals, right? So you always want to separate it so you can truly understand the cost and the profitability, right? So when you're looking at your bank account, or even with credit cards today, sometimes they offer categories of how they separate the type of expenses that you have. Some credit cards offer examples where they may just categorize it as utility expense or gas expense or food expense, right? So it offers availability of how you break down your expenses, right? In addition to this, so it's saying analyzing the hours worked by employees to determine how labor time is to be charged. So instead of having it by a job, process, or department, you can possibly have it by job title, right? So how much do the managers in general make? How much do these food processors make? How much do these chefs make? So there's so many different types of ways and categorizing expenses and income that you just want to be right in the type of format that you're using for this particular type of organization. Here's another way. You can charge payroll costs to jobs, processes, departments, and factory overhead accounts. So how much is this department making? Right? So you put all the expenses within that department, all the income within that department to truly understand if should you really let go of the people in that department. And I would say you should break it down even further by product, because maybe the problem is not the department. Maybe it's the type of product that they're selling. Maybe it's the type of product that they're building. So this is why you should have several types of reports so you can ultimately see where your profitability is stemming from, or where the bulk of your expenses are stemming from. We also have preparing the payroll, which involves computing and recording employee gross earnings, withholdings, deductions, and net earnings. You really want to see how much these expenses are costing you, especially, and again, when we talked about the health plans, the vacation plans, all the other incentives and bonuses. We have several hourly rate plans, we have piece rate plans, we have modified wage plans. And with the hourly plan, as we are working in these type of environments, possibly many of us have had an hourly rate job, right? Where they tell us maybe you're going to make $8, $20, no matter what it is. So there's going to be a definite per hour rate per employee for that plan. So we also have a piece rate plan, which is basically how many things are you producing, and I'm gonna pay you based on how many things you produce, not that how much time it took you to produce it. So whether it took you 10 hours, whether it took you an hour, I'm still going to give you that same rate. And we have modified wage plans, which is just a combination, right? So you have within accounting, if you remember in accounting 1 and accounting 2, or a certain type of intermediate accounting, is you have a modified cash basis. What is modified cash basis? It's a combination of your accrual basis as well as cash basis.